guys, going live to show you a little quick little side by side here. This here is Binance, this here is Bybit, and this here is Binance Futures, and I'm charting off Bitstamp right now. We have a sell and a short symbol setting up on the 5-minute on Bitstamp. You can see right here, these are printing at 9:35, 9:33. Bybit is lagging. It's at 9:47. So we're going to take the trade on 9:47 because Bybit is behind. And we're going to expect Bybit to catch back up to the rest of these exchanges. And there you go. Bitstamp right now is selling off as we expected. And we're waiting for Bybit to catch up. So this is going to be just a real quick short scalp, just to show you some of the strength of this indicator. Right here you had some longs, but then this green arrow is a breakout or buy or bailout. So what happens here is that the next candle over this would be a buy for it to break out and then go higher. It obviously didn't, so you're bailing out. And the rule is if you ever go long, whether it's buy or long, you never allow the candle to close within the body of the EMA. So this trades would have been over. That's why this short's now setting up right above the cloud on the 5-minute. So we're just waiting literally on Bybit to correct itself and bleed out. As you can see, Binance is 9:31. Binance Futures is 9:34. Bitstamp has a print of 9:39. Bybit's still at 9:45 and 50 cents. Basically a lot like fishing. Yes, you've got the trade out and you're just basically waiting for it to bite. Once you're in the trade, you're just basically managing it. As you can see, there's nothing on the bid right now for Bybit. It's almost like there's like a serious lack of liquidity right now on the exchange, because you'll see like a huge order on one side, like look at that 1.6 million on one side, and then the other side you get like 10,000. It should never be that when your spread is only 50 cents. So it lets you know that there's market makers in play that are keeping that spread to 50 cents. Otherwise, that spread would have just zoomed out. And you probably would have had like a $2 spread at least, just judging by the fact there was 1.6 million and the next one was 1.2 million, which was at least $2 away. So what Bybit does, it tries to keep the spread in the line. And sometimes that's good, sometimes that's bad. Like right now, this 300,000 in between, to me, is nothing. Yeah, see, it's all gone. Absolutely nothing there. Like you're trading between 90.43.50 and 90.41. That's everything else to me is just junk in the middle. It's just there to hold places. Like look at that 500 contracts. No, you wouldn't have this wide of a discrepancy if those were real bids and we're posting real numbers. So to me, that's all market maker mischief. And like I said, it looks like it comes from a serious lack of liquidity on the exchange. I'm not sure what else to tell you guys, but you need to get more traders on there to get more liquid, because this is, to me, feels like I'm trading against a market maker anytime I take size. So and you look over and you see Binance actually has spreads. Like on the Binance futures right over here, it actually has spreads. Like the spread is like $1, $2. It fluctuates and it grows. To me, that's more organic than someone who's manipulating this. Because look at this, 9:31, 9:29, Bybit's still 9:40. Like, you're gonna hurry up and get in line? Who knows? But again, all this here, junk, fake. The spread to me is $3. $2.50 to me is that's the spread. Everything else is just futtery. Hey, I'm fudding here, playing a game, just putting out numbers to try and hold this from descending. Like I said, like anyone who's got size, is just just wouldn't be putting it up on the exchange like that. So we're just watching here. It's catching up. See now, 30. See now it's within $3. It's catching up. See, and that was the easiness of the short. Just knowing that there is an arbitrage error setting up, that you could easily come in and take that short. Gonna close out a little bit more. Like right now they're trying to hold this spread, so we'll see it spread and go, and then in that spread I'll close out another 50K or so. I've only got 200K left in this trade, so even if I was to mark it out now, the amount that I would have made off of being a market maker would balance out what I would lose on that, and I would just book the profit. But I'm one of those ones that once I set up a trade and I tell people about the trade, I'm gonna stick in the trade because I don't want anyone else to jump in the trade and jump out of the trade and take a loss because they chased an entry even though I tell everyone not to. You look at it right now, we got 925 on Bitstamp. We're at 927.35 on the futures on Binance, 925.70-ish on regular spot Binance, and Bitstamp is still 934.50. It should really have crashed to 931. So we're just waiting on that to re-rate itself. We can see some 923s showing up on Binance Spot, 928. Bitstamp now is 925. Bybit is saying that 925.33 is the index price, which is the average of all the exchanges it uses to price itself. So we're trading about $9 above the index price. You can see right there in the yellow, it's roughly what the mark price is, because the mark price is based off the index price. And when you reach that mark price, that's when your order for liquidation will be sent. So now look at that, 1.5 million to 600,000. Then the next one down is 237,000, then 74,000. It's just so much imbalance. But then you look over here at Binance futures, and you're seeing more of a spread because first off, they allow you to pick your own price, so you have that. So you're hitting 50, like 40,000 on each side now. It kind of makes sense. There's someone here trying to chintz in for a couple pennies, but that lets you find your own spread and you won't beat your own trade. There's some benefits to that. Problem is going to be you're going to have a spread sometimes, and depending on your liquidity, the lack of liquidity you have, the wider the spread's going to be. So Bybit is counteracting that by providing you with market makers that are going to keep that spread to 50 cents. At the same time, too, if that's not an actual trader taking the other side, then it's obviously has to be Bybit. So you just have to be mindful of that and knowing that going in when you're trading. Yeah. Bitstamp there is showing us a little green hammer. This is a 5-minute chart over here on Bitstamp. But as you can see, the energy is dissipating and we're turning over here. So Bitstamp's 931.15. The Binance is 9 37.70 for futures, 933.50ish for the spot, and we're at 936 for Bybit. And again, look at that. 1.3, 1.5 million a year, and the other side of the spread is 1,000 contracts. It just doesn't make sense. But it is what it is. I really do like the Bybit exchange. The Bybit exchange. I really do like it. But at the same time, too, the lack of liquidity, the lack of traders on it, it prevents you from taking big size into trades. So forces you to stay small. Sometimes that's good. But if you're a trader with a lot of liquidity, sometimes it's not that good because you're going to get caught and stuck. So. And some quick keys about Bybit. Let's say you want to put an order out in your order. You want to close your position off. If you actually click the number outside your quantity, it'll automatically post that quantity into your order book under that quantity for you, so you know you'll automatically be taking the order at that level. So that's some good features about Bybit. Now we see it starting to come back down again. So Bybit again is going to kind of... The reason we're taking the trade on Bybit, first off, guys, is the arbitrage. We noticed the other exchanges were selling off and Bybit hadn't yet. So the opportunity was to get short on Bybit for it to close the gap. And we could take heavy size on heavy leverage to do that by going in as a market maker. So we get on the ask, we got filled our short, which means Bybit paid us for every $100,000 worth of contract you take, so 100,000 contracts, because Bybit is $1 a contract, they will pay you $25 for placing that trade up on the exchange. And then when you close that exchange, doing it the same way by putting it on the bid and being a market maker, adding liquidity to it, they will pay you again another $25. The other flip side is if you take that trade and you go into it to instantly get in, you're going to pay $75 for every 100,000, and then you're going to, when you exit, again, pay $75 on every 100,000. So when you take a trade like we just did of 1.5 million contracts, you really don't want to be paying for the pleasure of taking the trade. You want them to pay you for taking the trade. So we just closed out another one, another $50,000 worth. We're down to We're down 150,000 right now for actuals in the trade, and I'm looking at closing out 100,000 here. I think I'm going to do it. Yeah, okay, put that out. So here we got Binance 929, we got Binance Futures 930, and 939 for Bybit. And we're at 925 on Bitstamp, still in that short. $9.22 on Bitstamp. We have a minute left in this 5-minute candle. We've already crossed under the golden dump line. You guys are paying attention. This is the golden dump line right here. 943. We're underneath of it. We're also inside the cloud. So these all lend themselves to this prolonged short. So still in this trade. Bitstamp is 935.24 now. 930 even on the futures of Binance. 940 on Bybit. 927 on Binance Spot. As you can see there, that's what I'm talking about. That 1.8 million. And then you've got 1,000 on the other side on Bybit. This is it's a serious lack of liquidity in the exchange causing this imbalance. Because you look at the Binance futures, you go 47 by 27,000. You know what I mean? It's a 2-to-1 ratio, but 2-to-1 is better than 1,000 to 1. Okay, let's see if we can get some more here out. Oh, my bad. We're already all out. That's it. We're all out. I didn't even notice. Instead of setting 75,000 or 50,000, I put the whole 150,000 up. Got distracted. You know, well, that's it, guys. For me, since the trade's over, I'll let it play for a couple more minutes. Just showing you guys what the TTI is showing you off the squeeze. As you can see, we're still in the short, we're still in the cow, we're still under the golden dump line, we're beneath the EMA ribbons, and we're still in the squeeze. So what we've noticed about the squeeze is that we rarely break over 20. We're in that range of -20 to +20. When we do break over 20, as we did earlier, let me just bring this whole thing here into focus. As we did earlier, when we broke over 20, well, look at the move we had. And that was 118, and you got that rocket. So basically, you know this, whenever we're staying under 20, not too much, but when we go over 20, we're getting a move. So that's 35, and you got this move here. So, and because this, you're not obviously not going to know when it breaks over 20. It's just going to do it. So it's kind of a lagging indicator in that sense, but you already had the trade reversal here, and you had the long and the buys here, and you would have had this candle to short into, because this is the 5 minutes. But then you had the trade reversal here, and it's been telling you ever since that it's time to short. So trade reversal would have been a nice long to enter on. You had a buy here, and you had 2 longs. Could have sold into the peak. You should have sold into the peak. You didn't have the breakout or bailout here. Unfortunately, these things, exactly as the name calls it, they break out, they bail out, knowing that we're in a negative energy, that it probably was going to break out. It's giving you the short and the sell signals, because you can short and sell this. And this is Bitstamp, guys. And it's giving you long if you're already in the trade, because you're already in this buy. It's giving you a long here to average. It's giving you a long here to average. And then you had a sell right here. So that's Bitstamp. You gotta remember, guys, Bitstamp you actually can't short on. So let's take this to Bybit. Perpetual. And it's a little bit cleaner because you can actually short here. So you had your shorts here, and it told you to exit all the trades here. You then had your reversal. It was a great buy. You had a 3 long and a 3 buy. So you had a chance to get back up on this one. So if you would have bought the bottom of the candle right here, you had a chance to scale this back into the top. And then the mindset behind this right here is 1, 2, 3. So it's giving you a 3 count. So you would have put your 3 at the bottom of this candle here. You would have put your long at the bottom of this candle here. And then your average would be somewhere in here. Right now you'd be up. Remember the rule, don't let anything once you enter close within the EMAs. It didn't. It rode it all the way here, all the way here. Now when it closed in EMAs, you would exit your trade. Here's a sell area, so if you're any longs, you sell them. Now selling pressure coming in. You have a 5 short. So then you could have shorted that. But remember, guys, energy is only 20. If it's 20, you're looking for a scalp. It's pretty much neutral, so you just would have had a couple scalps. I wouldn't even enter this trade right here, just for the fact that the negative energy is here. Then you had this, which is, again, negligible. It's like nothing. Nothing happened. And you got the golden lump line. You got a long here. Now it's telling you short again. So if you were short, great. You had your breakout or buyout right here. It didn't work out. You had a long to add to your long position if you were still long from over here. Then you had your sell right here. Pretty much, again, have your break even. But you guys remember that the sell symbols are not going to be 100% on all the time. You've got to use the common sense of not allowing your trade to close within the EMA to keep you profitable. Because you had a breakout or a bailout. These are what you're shorting into. So you had a 5. So 1, 2, 3, 4, 5. There you go. Short into it. Breakout didn't work. You had a 2. So 1, 2, short into that. And right now you're just sitting there waiting on this here, being smart, knowing that the risk would be right here. 965, because that's the wick on your breakout or bailout. Or if you want to be even conservative more, take it straight down here to this right here. And put it at 959 and 50 cents. Post over that, exit your short. And you're just waiting for this negative energy here to build. And this crowd to just give up putting in volume. Still got a minute 57 left. But that's looking at Bybit, and as I said, like Bybit has that imbalance, so you're going to see 1 million on one side, you're going to see like 1,000 the other, so it's actually skewing my alert system quite a bit. So you guys have to be mindful of that. Like right now, let me just get this out of the way. Yeah, right now, look at that, 1.6 million to 440. Like you can't TA on such imbalances. You can't. It makes no sense. There is no amount of TA you can do on a balance of 1.5 million short or sell pressure to 440 of buy. There is nothing you can do. Like 516, like nothing you can do. Two freaking contracts. Are you serious with me right now? And then you're over here. And you got it here too. Like, don't get me wrong. Like, look, 9 contracts. So you've got it here too. 185,000 to 3,000. Now 35,000. So you're gonna get it on a lot of these exchanges when there's lack of volume. But when people are trading, people are here, people are active, you're gonna have no issue. So keep that in mind, guys. The longer you drag on to a trade, the less people who aren't traders want to be involved. You want to make your money and go. So that's why I always preach, take profit early. Lock yourself in, pay yourself for being right, pay yourself for taking the trade. And then you don't have to worry about this. Like, if I had held my entire $2 million trade that I had the other day to like the very last minute, I'd been screwed. So I'm scaling out into the spike. I was scaling out to the liquidity because there's buyers coming. It's the same thing we do when we were trading penny stocks in the stock world, guys. It's the same mentality mindset. Is everyone thinks they're going to get rich quick? Well, feed their frenzy, sell into those spikes for them. Offload your longs at the same time too. Those are the ones when you're adding to your short position. You're building your short position. Like, look at that, 1.9 million to 500. Anyway, guys, not much you can do with that. So, still negative during participating, still coming out. All right, guys. Still Size TTI for Send Trading. Just giving you guys a quick overview of trading possible imbalances between exchanges. That's a little bit of arbitrage by having your spread of exchanges up and taking them on the one that basically the odd one out. If your spread of 4 exchanges are doing one thing and one exchange is doing one, well, that's the odd one out. So one or two things will happen. Either that exchange is going to get in line with everything else, or the other is going to get in line with it. So it's been a Size TTI once again for Send Trading. Out.